details. Now, whenever you dispose a qualifying asset, the first thing you ask or check is the asset disposed within 2 years from the date QP incurred. Okay, so the first question you got to check is this disposed within 2 years from the date QP incurred? Okay, if yes, then all CA claim will be clawback. So clawback, understand? Take back from you. Okay, they claw back. And how they will take back from you? The way they take back is they charge it back by having a balancing charge in the year of assessment for your disposal. How much you claim, we take whatever amount, we put it back as a balancing charge. So it's set off already, correct? You claim 10,000, balancing charge 10,000. Then immediately you set off the effect. So that's why asset that you buy, if you claim CA, within 2 years you don't sell. It's within 2 years, not within 2 YA. That means it's exact 2 year 24 months that we must count. Okay? Now, of course, if the answer is no, that means this is disposal more than 2 years. Then we treat this as the normal BABC computation. Okay? You come into the normal BABC computation. So what's the normal BABC computation? That means you're going to take dV minus RE, that one. Okay? dV minus RE. Okay, now, so the normal BABC computation is by taking the disposal value minus the residual expenditure. Now, I think by now you know what is loss, what is gain, right? So if it's a loss, you call it as balancing allowance. Okay, if it's a gain, yes, balancing charge. Very good. Now that's the normal way of how we do BABC computation. So until here, nothing special. So now we're going to zoom in. Okay, we're going to zoom in. Now, the moment if you get a balancing charge, okay, the moment you get a balancing charge, you will need to check. Because the law says BC cannot exceed the actual allowances that you have claimed. claim. Understand? Claim. Claim means those that you deducted from your income. That's called claim. So, do you claim IA? Do you claim IA? Yes. Do you claim A? Do you claim notional? Do you claim notional? Do you take notional and minus from your tax? No. So that means when we say actual allowances claim, we only refers to initial and AA that you have claimed. There's no notional there. Okay? There's no notional. Now, meaning, no matter how expensive you sell your asset, the most that the government will do is to take back exactly what they have given you. They don't tax profit on selling vehicle or selling a machine, because because the idea is all these fixed asset, if you sell and you make a gain, the gain is capital in nature. So I've been telling you all that capital gain don't tax. Then now you see you sell a machine, then I make a profit, then you charge back. Then where got logic already? You think and see? Where got logic? Then you tell me capital gain don't tax, but now you tax me. That's why you must understand. We are not taxing you on the gain. We are just reversing what you have taken. That's why the charge is, if you made a gain, then whatever that you have claimed, we set it off. But the most we can set off is up to what you have claimed only, and nothing more than that. Understand? That's the idea. Okay. But anyway, this is the rule. Just remember the rule. Follow? Okay. So balancing allowance, no issue. Nothing to check. So what we need to check now is the next issue here called disposal value. So what's the disposal value issue? Now, first, you must ask yourself, DV is what now? Now, DV is actually the higher of the actual proceeds. Okay? The higher proceeds with the market value. So again, friend, we are using the higher. Is the higher. Okay? Alright. So if it's the higher of these two, but one more small issue. If it's non-commercial motor vehicle, then please check once more. Have you restricted the QPE? If yes, then please also restrict the DV, or else it's not consistent. Okay, or else it's not consistent. Now, I'm going to use a quick example here. Okay, let's say you bought a new BMW for $500,000. Okay, I just straight away use YA in Y2010. Okay, now, and you dispose this in 2013, right? Like 3 years later. Okay, I don't think you need to be an expert in car. This $500,000 new car, after you've driven them for 3 years, and you think you're going to sell it, how much you think you can sell? Okay, 300. Will it be 40,000? 有可能吗 40, yeah, 40. No, impossible. Unless you tell me the car has been exploded left with 4 tires. Okay? Now, so I believe you can understand that the value cannot be 30, 40,000, right? So, okay lah, we take half the price. You dispose it for 250,000. But of course, if you take depreciation and you try to depreciate, so probably after 3 years, maybe you can still have a worth of at least 300,000. Okay, so let's say now market value is 300. Yeah, don't talk nonsense, are you? Now, for 500,000 sell for 150. Okay, your dad don't know how to find buyer. Okay, now the CA. Okay, how do you start? The qualifying plant expenditure is how many thousand? 50, correct enough. So YA2010, you have IA and AA. 10,000. 10,000. Okay, Y2011, you have AA, another 10,000. Y2012, you have AA, another 10,000. So RE will be 20. Now, so CA wise, that's how you're going to see, okay? That's how figure going to be. Oh, sorry, 10,000. Thank you. RE 10,000. Okay. Now, so the CA wise will be like this. Now you dispose. Okay. Now you dispose. So the disposal comes in. Okay, guys. Now, look here first. Look here. Because the moment you understand the idea and the purpose, at least you don't remember so hard. Okay. Your proceed is 250,000, correct enough? Market value is 300. So you take the higher, correct enough? You take the higher as disposal value. Now the higher will then use to minus with the RE, which is 10,000. Okay, what I want you all to see is very simple. You look at the figure here and the figure here and you tell me, makes sense or not? No, right? Why not? Because you say one figure is you based on the original cost of 500,000, correct enough? Then the other figure is you based on the restricted the amount that's already 10 times smaller. Then you want to take these two figures and calculate how to calculate. It doesn't match, man. So that's why, if you have restricted the qualifying, so always remind yourself, you must also go and restrict the disposal value. So how do you restrict the disposal value? You just take this, multiply by the proportion. So it will be 50 out of 500. So that's where you have your adjusted disposal value, which will just be 30,000. That will give rise to a balancing charge of 20k. Get the idea? Now, so this is one step that you need to do, which of course usually students will not do because they always forget. Okay? So that's why I need you all to understand. So once you understand, then you remember, then you will always do that adjustment. Okay? Alright. So this is how you deal with disposal. So now the effects of disposal, the car, everything come in already. Okay? So I can now show you an example that looks at all the issue. Okay? Now we're going to see this example here in page 179. Okay? Okay, we'll see example number 3. Now, Pioneer, which made up its account to 31st July annually. Okay? Now, look at that example, right? Okay? Okay, so Pioneer, which made up its account to 31st July annually, purchased a used motor vehicle using car purchase in April 2009. That non-commercial car is 60,000 ringgit. Pioneer traded in its old car for 25,000, agreed to pay a monthly installment of 1925 for 20 months, commencing on 1st May 2009. And now this car was sold for 42,000 in April 2012. So I would like you all to work out the CA for me. Then in the year of disposal, the BABC. Okay? I'll give you a few minutes. Get this done. Okay? Sure, just use your pencil and write down some numbers at the side. Okay? So just try and do it. Okay? CA, BABC. Remember, this is hire purchase, so you must start with your example, partly for business, so you qualify CA, and then partly for other reason that you got no CA. Please remember the steps carefully. Use the full amount of QPE to calculate CA. Then take the CA times the business usage percentage to get the amount claimable. Dual purpose. Now I stress on this is because when you move to industrial building allowance, the steps are terbalik. Okay, so they are totally different. So if you don't remember carefully, then later question come out you're working wrong. Okay, so you must know that CA is like that. Okay, give you an example. Now, let's say Ali uses a car that he bought for 40,000 and 60% business use, 40% private. Okay? Now, compute CA is one part. Your tax com is another part. The tax com is the CA that you're going to claim. Okay? So when you compute CA, you're going to start with qualifying plant expenditure 40,000. Am I right? Whatever YA, let's say you claim initial annual, which is 8,000, 8,000. So your RE become 24. Okay? And later on, when you move on to your taxcom, you have your business, right? And under the business, you're going to show your adjusted income, whatever figure, and you're going to minus CA, right? Now this CA will obviously be the amount you see here, but because the business usage is only 60%, that means you have to use 16,000 times 60. So you get 9,006, and that's where you get your statutory income. See, that's the steps that you follow. You understand? Huh? Now, because some of you will say, I straight away take the qualifying times 60% first. Then I get 24,000. Then only I calculate all the way. Is it the same? Yeah, mathematically, yes. But according to the law, no. So that's why if you do like that, your answer is wrong. Okay? So no doubt you get the same figure, but the steps are wrong. So please, you must follow the steps. Okay? Now, that's how you deal with dual purpose. Okay. So I'll move to another small area. So turn to the next page. We're going to see this thing called small value asset. Okay, small value asset. Alright. What do you mean by small value asset? Basically, a small value asset is asset that its cost does not exceed 1,000 ringgit each. Okay? So that's called small value. Cheap asset lah. Okay? Small value is the cheap things. Now, let's say you buy a fan. You buy a fan, stand fan that you put in the office. You pay 90 ringgit. You are claim CA. It's asset, correct? 90. You look at the percentage. Your initial allowance is 18 ringgit. You think and see. So in small business, never mind. Think about a big listed company with few hundred millions of revenue that they have few hundred million of taxes one. 18 ringgit, all this sort of thing, you just hachi the figure blown away. You see, huh? So how to show all that? That's why the amount is just too tedious. Okay? So that's why the government is thinking that why not we just make things simpler. All these small thing, we don't kira so much. We just let you claim the whole thing. That's the idea. You just claim. Okay? Now, so that's why when you have small value asset, we give you a special treatment that you can claim 100% allowance. So some of you, the one that still work in the tax line, you open the book, the blue color book, the tax book, the budget book. They will show that small value asset is 20% IA, 80% AA. That's what they show. Now, because in practice, 20, 80 or 100, the figure is the same. End of the day, you are just submitting the figure to the government. Correct, no? Who cares so much about your working? Agree or not? But here we are not. We are in exam. You study the law. So the law never say 2080. There's no such thing as 2080. It's just that in the book, convenient, that's the only column they have. That's why they show 2080. Okay? In the law, it's just a special allowance. So what is this allowance? Don't know. You cannot call initial. You cannot call annual. There's no initial, there's no annual. It's just a special allowance. So the special allowance is 100%. Is it IA? Is it AA? No. Not IA, not AA. It's a special thing that we give it to you because it's a special treatment. Okay? Now, no doubt there's this special treatment that we give you 100%, but the government also very scared. Give you too much, then you claim, they scared. So they decided to put you a limit, okay? So what they say is, the maximum claim per YA using this 100% is 10,000 ringgit. So you buy 100 stand fan at the price of 90. So you claim 9,000 straight, no problem. But if you go and buy 200 stand fan at 90, it's 18,000, right? Then 10,000 divided by 90 is about nearly 111 fan, correct enough? So the 111 times 90, okay, this 9990, you claim 100%. Then the balance, okay, the balance you use back the normal way. You see now? You just use back the normal IA and AA. Follow? So the AA, you just follow back 10, 14 or 20% accordingly. That's how it works. Now, so this is the rules that they impose here for the 100% allowance. Now, no doubt they impose the maximum. Then later on, the government changed its mind. They say, why not we be more lenient to this small company so that we let them claim more. So they decided to do away the limit. So this limit will not apply to a small company. So when I say limit will not apply to small company, meaning you can claim 100% as much as you like. Agree or not? So the company decided to buy 600 stand fan collector and spend 54,000. You claim, understand? You claim. But again, for who?
For
Small company. But then you think and see, actually not only small company is small, right? A lot of small proprietors also very small, right? Correct or not? Proprietor, they're very small. The individual, the Milikan Tunggal, that one is all very small. But unfortunately, they miss them out. They only define small company. That means individual will still go back to 10,000 limit. Big company, 10,000 limit. The small one, small company, got no limit. Understand? Okay, that's about the small value asset. Okay, see a small example here. Now, Mazda, the year end is 31st December. They spent 21,000 ringgit to buy 30 units of factory machine. That means one unit is 700. So the cost does not exceed 1,000. These are all small value, right? Okay, the adjusted income for Mazda in 2012 is 280,000. The CA is 34, but does not yet consider adjustment on that newly acquired factory machine. Okay, A. Assuming Mazda is not a small company, what is the statutory income? Now, the adjusted income as given is 280. Agree? They are not small company, so if they are not small, then there's a limit, right? Correct or not? Okay, if there's a limit, then when you show the CA, I will have to split the small value and machine. Okay, the small value got how much? I mean, how much you gonna show here? How much? 10,000? No. 9,008. 10,000 is the maximum limit, but does not mean you straight away take 10,000. You must still look at the cost of the asset. It must be cost per unit closest to 10. So it's 9,008. Get the idea? Huh? So the balance go under the normal one. So IA, AA and special. So IA is 224 1568 9008 that's 13608. But then don't forget, they also said that the existing CA other CA is 34. So in total your CA will be 47,608. So statutory income will be 232,392. Now B I'm asking, what if Mazda is small? Small means the limit will not apply to your small value asset, correct or not? That means your adjusted income is 280. Now your small value asset CA will just be 21,000 times 100%. So you get 21,000. Then other CA will be 34,000. So your statutory income is 225. Alright? Okay?